Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at that bigger macro view of the bear market, where we currently find ourselves and where I think the potential for the next bullish market could take the price of Bitcoin. As I get into today's video, if you did find it useful, informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out. The link is down in the description below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into today's video. Let's take a look at the current structure on our weekly chart here. So this is Bitcoin paired up with USDT weekly, and Binance is our data source, mainly because Binance has a lot of the history here, of course, on the USDT pairing. And it's interesting. We have one indicator on here. Actually, we've got three. We've got the EMAs, but we don't really need those right now. I'm just going to focus in on this one here. Okay, this is the Gaussian channel. Now, the Gaussian channel, in terms of Bitcoin's history, has some very interesting things. And in fact, if I were to scale this out towards our Bitcoin USD pair on Bitstamp, let me actually just hide all the drawings off. You can actually see a lot more of the history when it comes to the Gaussian channel. Now, obviously, it's not a USDT pairing. It's just USD, but there's some interesting things. So if we zoom in just over here, where we kind of see this really big parabolic move to the upside, right? This is the first kind of major run for Bitcoin, and it kind of peaked out in 2013, November of 2013. We come down towards our Gaussian channel. Now, our Gaussian channel essentially is made of three moving averages. We have the upper, we have the mid, and then we have the lower bands, right? And essentially these particular averages have some interesting correlations to price action across Bitcoin's history. Okay, so here we can see that the second that we closed inside the Gaussian channel, we saw the bear market really come down very aggressively, and we went into the bear market low point. And obviously you can see that the average price goes from green to red, in symbolizing basically good value areas. Okay, so we can start to see as we come down into the lows that we have a red Gaussian channel, we have this area. Then of course we start to see a bit of a move back to the upside. And once we closed above the Gaussian channel, okay, the upper band again, we're off to the races up into the 2013 highs, okay? So some interesting things here, right? The second that we closed inside it, we went down under the lower band. And the second that we closed above, we rallied on up higher, right? And then we come into the same scenario back in 2018. The second that we closed inside the Gaussian channel upper band, we then closed it down below the Gaussian channel, and the channel again turned red from green, right? It's very straightforward. We then go into the 2019, and this is where things start to deviate from that kind of logic. Okay, here we can see that we closed inside the Gaussian channel, and it did in fact take us down deeper. We bounced from the mid-level. We did actually get a close above the Gaussian channel briefly, but we still came down lower. Okay, so a lot of people look at the Gaussian channel and say, okay, well, history tends to repeat itself. We close inside, we close above, and so forth. We can see these kind of runs to the upside. Back in 2020, with the pandemic crash, things changed for the Gaussian channel. Okay, and then of course we go up into the 2021 highs, and we closed inside the Gaussian channel 1 week. The very next week we closed above it, then we closed underneath it again, and we went down, and of course the Gaussian channel turned red, right? We have the existing lows. We had the low in June 2022. A lot of people were tricked into thinking that that was the bear market low point. But in fact, we did come down with the FTX crash into November 2022. And then, of course, we're back above, right? We've closed above the Gaussian channel, and we've closed inside the Gaussian channel a few weeks after, okay? So right now we can see we have a very similar setup to what we had back in 2018, right? We closed above the Gaussian channel and closed inside it a few weeks apart, and we still came back down deeper into the pandemic crash of 2020. Now, of course, we don't have that necessarily on the horizon here, but there's obviously the potential for World War III and so many different negative things, and the economy is not in a great place either. But we have a very similar thing going on here in the way that we closed above the Gaussian channel upper band, and of course we've now closed back underneath that upper band on the Gaussian channel. So essentially here, if we were to follow the history repeating itself as per the moving averages of the indicator, then of course we potentially are looking for a move to the downside. Now, this is not just because of 2018 or 2019 or 2020. This is also what we saw back in 2014. When we closed inside that Gaussian channel, it led us down deeper. So the question becomes, is history repeating itself? As so many people want to kind of say, the history does repeat itself, and they're picking and choosing what they want to believe in, right? And for example, and some very clear example of this is the Bitcoin halving event, right? History tends to repeat itself. Bitcoin halving event, we're in a bull market, fantastic, right? But they're picking and choosing that that's the one narrative that they're willing to follow. But if history repeats itself, we've closed inside the Gaussian channel again, that essentially does mean that we have to come down deeper in price, and we're not actually in that bullish market yet. And so the question becomes, how deep does this actually end up going? Are we going to lose that mid band on our Gaussian channel, and are we going to go down deeper in terms of price action for BTC, which ultimately will be disastrous for many altcoins? We already are seeing new bear market lows at the moment, right? So we already know that we're still in a bearish market. We see altcoins continuously bleeding out, even if Bitcoin is stagnant up in this higher range. Even though it has pulled back quite recently, it has been stagnant, and that stagnant moment, we've seen things like Avalanche's AVAX go down into new bear market lows. We just saw Polkadot, for example, go down into new bear market lows, and so many others, right? This isn't surprising to us on the channel. We're pretty much following the market, and we have been very, very good, at least in my opinion, at being very predictive over where the market has been going across the several months of this bearish market that we have seen so far. Okay, and I still think that Bitcoin has to be moving down towards that $20,000 CME gap before we can even start to think about the idea of a bullish market. And of course, if we follow the bigger, wider economic climate, then we obviously have a lot going on with interest rates, inflation, and the potential for a Fed pivot. And the Fed pivot is not necessarily going to be positive. It can be quite negative, specifically as we start to think about essentially what happened historically when the Fed pivot. When the Fed pivot, we see a good 50% correction in the stock market. And do we think crypto and Bitcoin are going to be completely independent and do something totally different to the stock market under those particular scenarios? I don't think so. I think it's going to be very much the same. Following on from this morning's Bitcoin video, where I'm going through the on-chain data, we can see that there's an excess of around 1 million BTC sat with what I would say are emotional retail investors that are going to be having to make some tough calls. And these are going to be of whether you pay the mortgage, whether you pay those bills that are mounting up, or whether you hold on to your cryptocurrency assets. And for me, I think with the amount of Bitcoin that's currently held at that retail level, I would be very surprised if they do not succumb to selling. We see 1 million wallets with over 1 Bitcoin in them, and I think we are likely to see that reduce by a pretty substantial amount. I wouldn't be surprised if we were to see that drop down by a 30% move, and that will be enough Bitcoin to flood the market and bring the price of BTC down for those larger institutional investors to be buying up. But again, I reckon there's going to be around 900 to 1 million BTC that will come onto the market at a little bit later down the line, where I think ultimately that's the BTC that the institutional investors will be looking to purchase. So we went through that this morning. That's kind of where I sit with that. So this bear market, in my opinion, is not yet over. But what about that bullish market, right? Because the bull market is something of interest for many people, right? And so where do we think Bitcoin's going? Well, I don't think we are going to be going into very significant all-time highs anytime soon. And there's a lot of reasons and rationale behind this, right? A lot of people will not apply Elliott wave theory very well or correctly. They might do things like this, for example, and they'll say, look, here we have a 5-wave pattern, right? And they'll draw this on. They won't use the fibs, by the way. They'll just go, look, 1, 2, 3, 4, 5. We're going to the moon. We're going to like $1 million Bitcoin or whatever they end up saying it's going to be, right? Ultimately, that doesn't really work out very well here when we actually start to reflect on certain things that have got to happen. Okay, so we haven't hit any impulsive trigger points or anything like that. This is more, however, likely to be more of a W, X, Y, X, and Z pattern if we were to take the USDT pairing here. But we do know that actually this came up from a much lower level, right? So we already know that we're not even in that kind of territory. But if we were to think like this, then we will be looking at this particular move going up higher than 1.382, but not at 1.618. And here you could say, okay, well, we have some interesting kind of levels to be kind of targeting out. And you'll note that 1-to-1 is just about $109,000, right? And so that WXYXZ pattern would be very, very interesting if it did land up in that particular area. So WXY X and Z like this. Now, the other thing that we could do here, let's see if I can find what I'm looking for within these tools, because you can see I don't use it very often. I would have thought it would be right in one of here. Choose a curve. If we snap on a curved line, okay, across these areas here, and we actually start to curve this out a little bit. It's very badly done, by the way, guys. Apologize, I should have pre-planned this one. But if I go ahead and draw this in here, and we can kind of adjust our curvature just a little bit here. Okay, and we kind of try to pull this back down. It's probably going to be more in and around about here. Yeah, about there. You can start to see that you've already kind of reached that level of elasticity where essentially you're on diminishing gains. Now, we already know that we have diminishing gains across the board here. Okay, so we had really good gains back in our 2017 highs, and then, of course, only 2,000% in 2021, right? And we can see potentially even less than that. Now, this curvature of the line is not ideal, so I'm going to come over to the USD pairing here. Okay, and this is the big chart. In fact, I might even be able to kind of bring it up on this one here. There we go. So this one here is basically, again, using that USDT pairing. But if we were to go ahead and take this over into the USD pairing, I think here we end up with some interesting kind of ideas. Now, at this particular level, what we've gone and done is we've connected all the peaks of the previous runs. So we have the 2013 highs, we have the 2017 highs and 2021 highs. And then, of course, we have the lows as well, right? We have the low from down in November 2011, connecting up to the low up here on March 2020, which, in fact, we could potentially adjust this curvature of a line to bring into account this low over this side. And then you can start to see that we connect up all of those existing lows, a little bit more riding the line on the low side back up in 2012. But for the most part, if we connect those lows, we can start to see that, we kind of haven't necessarily reached the bear market low point just yet. And in fact, if I were to adjust this ever so slightly more, because in reality is that we actually need to hit a little bit deeper. We can zoom out here and bring this down. So as you can kind of see, as we kind of curve this line out, we can start to connect all of these low points together. And you can see that we kind of have a very much a parallel channel in the way that this arc is kind of going forward in time. And we can see that we have those upper areas and those lower areas, right? And this basically means that we are not potentially even down at that low point. Now, this is an extreme level, and on the assumption that maybe we haven't actually bottomed out our moves here for BTC. And specifically, if we start to keep trying to adjust this just a fraction more, as we start to try to bring up into our range a little bit here, we can start to see that we didn't tap into this range quite a bit until those real true movements out of the bear market low points, right? But we do tap the line nonetheless. I think essentially here for Bitcoin to kind of come into its own, I suspect that we probably are going to be looking at moving down towards that $10,000 to $12,000 level in that bear market before we get into the bull market. And where do I think the highs of this bull market is likely to be? Well, we have this upper limit at around somewhere between $110,000 and $120,000, and that would actually fit quite nicely with the diminishing gains that we see over time as well for BTC. So for the most part, and I think, we can see and we can acknowledge that Bitcoin has got a bright future, but we also don't want to kind of trick ourselves into thinking that it has kind of this $1 million impulsive movement instantaneously. I think at some point we will start to see pretty decent progression to the upside. I think it has to. If it doesn't, then there's going to be some pretty big problems further down the line for the BTC network, specifically with the proof of work concept and the way that that's going to require even more energy to mine significant amounts of Bitcoin. This is going to be problematic for the mining companies who maybe will not be turning a profit. And if they're not turning a profit, what is the point in running the miners? And if you're not running the miners, then who is confirming transactions on the network? And you can go down that rabbit hole quite a bit. So it's inevitable that price action has to kind of reach these kind of areas in order to be a sustainable model going forward. And when we understand that, then we obviously have to understand that this whole entire model that we see in front of us is only really short to medium term across the next few, maybe 5 or so years. Outside of that, we'd have to see a pretty decent run on Bitcoin if we want it to be sustainable going forward. And so I think it is an inevitability if Bitcoin is to survive that we will see, $1 million BTC at some point in the future. But I don't think that's going to be the next run. Even with the Bitcoin spot ETFs, I think that will drive a fair amount further forward in terms of the price action of Bitcoin for the short to medium term. But at the moment, unless, of course, there's evidence within our data here to suggest that we're going to break above that $110,000 to $120,000 level. I'm just not seeing it. But let me know what your thoughts are in the comments down below. Do you agree with me that we're still yet to see these bear market low points? Do you think that the Gaussian channel is, in fact, an indication of things to come over the next couple of months? Or do you think that maybe, we will break above $120,000 Bitcoin? Let me know in the comments down below. Until the next one, though, guys, have a fantastic day.